We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com, blue screen TV. The action item we're going to talk about today is the stimulus, the stock market, the effect on the US dollar, and gold, and all the other negative dollar assets like Bitcoin and silver, what have you. Stimulus since the 2016 November election has obviously been the top tank. Early on it has been the Trump tax cuts, and then the Fed started to increase interest rates and reduce balance sheets. That was offset with Fed speak on curbing interest rate hikes and talking about stopping balance sheet reduction. And also later on, or more recent, we've had Trump speaking on trade deals with China, and obviously Trump bullying the Fed. So now we've going and rolling into the 2020 election, some 19 months away. Trump needs 19 months of stimulus. He has called for QE4 and via Kudlow a 50% rate cut. And 3, it's suspected that the very near announcement of the China trade deal, that there be some sort of currency component, a US dollar bearish element. Both Trump and Xi need a political deal to suit. Trump needs to dial down, which helps stimulate exports, stimulate manufacturing. Xi needs a lower dollar to allow him to buy US dollar based commodities at a lower rate, so he can accumulate for construction and the Silk Road project. Both are political animals, even though Xi is a president for life. President for life can come to a sudden, quick end if things aren't happy for the domestic economy. And Trump needs stimulus to get elected, so I'm sure they're going to find a deal where that somehow involves suppressing the US dollar or halting the US dollar getting too strong. Some sort of component's bound to be in there. I'm not saying it's going to go to 92, I'm just saying maybe it goes to 98 or 99 and holds and swings back down to 94 or something. There's some sort of suppression element of the US dollar is going to be expected. It may even trend down. All bullish for anti-US dollar trades like gold, silver, Bitcoin. Now Trump did say the announcement could be some 4 weeks away, that's like late May, or it could be 8 weeks away, who knows. But you can imagine with that sort of time involved before the announcement, that the composite man, the big boys, are going to manipulate the market to allow them to accumulate and to keep their dollar cost averaging attractive. Here we have a downswing and here we have an upswing, and now we're getting a bit of downward pressure. The 200-day moving average is around 118. As we can see here, this downswing here on the gold, this is GLD weekly, and this upswing here, whoops, all have very high volume, so that means the dollar cost averaging of accumulating a healthy gold position is around the 118, 120, 122 mark. Now if we've got 4 weeks to go, that gives the powers to be behind the market a little bit more time to maybe accumulate. So halfway is about 118, 117, which is about the 200-day moving average. So I would expect to see gold suppressed right up until about 3 to 5 days before any possible announcement, subject to it being delayed, of course. So this could swing around for 4 weeks to 8 weeks, something like that. So nothing certain, but I can imagine that we may even get some leaks along the way to stop the US dollar getting stronger. So anything can happen in this type of environment. Trump doesn't want a higher dollar, and nor does Xi. As you can see, there's some sort of accumulation going on. The dollar cost averaging is being well done below resistance. All right, there's a resistance up there, 130, and above support. So I believe there's a strong swing trade coming out, and maybe a possible breakout in gold between now and the end of the year. All the readtheticker.com price volume indicators are showing a healthy build-up of on-balance volume. Right? The big boys don't accumulate when prices are rising. They accumulate mid-range. They allow the price to come down so they can buy on the downswing. Obviously, they don't want to do any damage to the chart. Okay, this indicator here is the Wyckoff 2 on balance volume, and it shows good strength there, good balance here. We had some pretty strong trend lines, if I remember rightly, at this point here. Let's have a look. I'll go back down, eh? Might have been a trend line somewhere in there, but anyway, there was a fade there in the breakout. Okay, it was a fade. Oh, you can see there's a trend line down there. Boom, boom. As you can see there, it bounced off the demand line there, or downward trend line there. And I believe the 200-day moving average, there it is there, SMA 200 is there. Is around, whoops, sorry. It's around the 118 mark, so I wouldn't be surprised if it just tested that. We go to the 150 EMAs. Here's a good example. Here we are. The red line is the 50 and the blue line is 100 EMA on the GLD. As you can see here, there's a mild penetrations of it and a quick recovery. Boom there. Wouldn't be surprised if it even gets down to 118 and bounces back up there. As accumulation goes on, the big boys to accumulate a nice, really healthy dollar cost averaging. And if the announcement comes and it is dollar bearish and stimulative, you might see price move up and obviously challenge the 130 and go forward. We've already seen bullish action, another negative US dollar trades, which is obviously the Bitcoin. I believe silver is also getting ready to move as well. So, what's the gold chart? What's the Bitcoin chart? Wait for announcement. Trump needs some stimulus. You can't afford the US dollar to get too strong between now and 2020. So there's going to be a currency element within the trade, within the trade deal. And it's going to be reflected in gold prices. And it's a win for both Trump and Chairman Xi. Thank you very much for watching.